Here we are recording capital market amendments for December 2024. Again, I tell there is no much amendments because the amendments cover from December 21, 2023 to May 31, 2024. So most of it we would have covered it in June 2024 attempt, most of it. But yes, few here and there amendments have also been added, which we have already covered. So yep, so nothing to worry. We would have seen it. Yep. Okay. So again, as I always say, people, I hope your what is that, studies are completed. You guys have done enough revisions, and yes, everything is all good, going good. So before you guys watch this, make sure you guys also watch June 2024 attempt as well. That's my standard dialogue, which I always say before you go to any exam. Try to watch at least 2 amendments and go. Always helpful, so try to maintain that. Clear, all of you? Okay, wonderful. Let's start. There is nothing much at all, but yes, whatever is there, let's cover it off. The first one is in chapter 2, secondary market in India. It's not an amendment, it's an addition they have done. They have added something. Now, what is that? People, earlier we were coming under T+2 settlement. Now, what is T+2? Imagine if on a Monday, if I am going to sell a share. So, if I sell a share on Monday, it will be considered as a transaction day. That is the meaning of T. So, on Tuesday, it will become T+1. On Wednesday, it will become T+2. This is a transaction day after that second day. So, if I sell a share on Monday, I used to get the money credited to my account on Wednesday. SEBI has reduced this to T+1 today. So today this is the effective date. We were the first one in the world to achieve this, that we are doing a trade at T+1 settlement. Meaning, if you trade on Monday, the next day you guys can withdraw the money, T+1. So Monday you sell, Tuesday you get the money. As simple as that. Now SEBI is planning to reduce this to T+0. Now, what do you mean by T+0? If at all I do a trade on Monday itself you are going to get money. Now, for this, no T+1 itself, no one else has done it in the world. Now, T+0 is far-fetched. So, SEBI is doing it as a beta version. Beta version, it is trying it out. Now, how are they trying it out? They have selected 25 scrips. Scrips means people, shares. In this, SBI is there. MRF is there. I think one more company, JSW, like this 25 companies are there, 25 scripts. So only for them, and that too with some other conditions also, like your trade should have happened between 9:15 to 1:30. If at all within this time, if at all the trade has taken place, then you are going to get the money credited on the same day. Otherwise also, imagine if I have purchased it, I am going to get the shares on the same day. And that is what SEBI is trying to achieve. And that is the meaning of T+0. Sir, applicable to everyone na? Illa. Then sir, that means they are telling that we are trying it on 25 scripts. Remember this, important. Is this clear? Pakkana? Sure? That's the new addition. Clear? Okay, done. Next ones are scores, people. It's a big process that I have done it in the June 2024 attempt. Very important from exam point of view. Do go through that. Very, very important. It is related to that only. Clear? So I'll leave it for June 2024 amendments for you guys to watch. The next one is, people, when we are doing social stock exchange, we would have seen 2 terms. The 2 terms are called as social auditors. So we can be social auditors today. I hope you guys know. So basically you will be auditing these NPOs and things like that. Of course the scope is vast, but I'm just explaining it to you on a layman's language. So now what they have done is that whatever the words used was, it was used as a social auditor, and they've used the word called as social audit firm for the people in partnership. Now the words have been replaced with social impact assessor. Instead of calling it a social auditor, they have called it as social impact assessor. And social audit firm has been now called as social impact assessment firm. That's all. That's the amendment. They've changed the words. Next one, the social stock exchanges. I hope I've told it to you guys in n number of times in the class. What is social stock exchange? That means what, people? The stock exchange where the NPOs or even for-profit organizations also, they come and list their securities. The securities they use is called as, people, zero coupon, zero principal bonds. They are going to issue it to the people. So on this, people, there will be no principal, there will be no interest. You are not going to get back the money. It is something you are giving as a charity. So the place where these securities can be listed is called as social stock exchange. We have seen it in n number of times, even in the previous amendments also watch it, but I'm still telling it to you on the face of it. So that's the meaning of social stock exchanges. That is, if it's a non-profit organization, they can list their securities. Now imagine if I have crazy money, sorry, I'm poor, you guys have crazy money. Now you guys do not know where to spend that money. You want to spend your money on a some good purpose. I'm not saying lakhs and crores. Imagine on your birthday you want to spend some 2,000 rupees. Sir, I can go and give it to near my home only. No, sir, trust. No, my first question is it accountable? Do you know for a fact that they are going to spend it on the purpose what they raised it for? Are you sure? But here you can be sure because it is going to be regulated by SEBI, and that is where you as a social impact assessor will come. So you cannot do a fraud so easily. See, even if they do, then that's karma. We can't do anything. But at least we are going to that level to monitor it and regulate it. Correct? No? Yes or no? Okay. So here, the social stock exchange, who and all can invest money there? They're telling institutional investors. We are individual. Institution means banks, mutual funds, as the case may be. Non-institutional investors, meaning institutional is companies, non-institutionals us, and retail investors us. Sir, how can both be us? Non-institutional means people, individuals. Individuals can be further classified into broadly two types. One is called as HNI, one is called as RI, or you can call them as RIA only. HNI means people, high net worth individuals. You are also counted here. RIA means people, retail individual investors. We come here. So HNI is you guys are investing a really big amount. So for example, in an IPO, a retail individual investor, if your account is retail individual investor, you cannot invest more than 2 lakh rupees in an IPO. HNI can go beyond 2 lakhs. You can invest more than 2 lakh rupees if a company is coming for an IPO. That's the power of a HNI. So both of them can invest. Procedure, how to list, sir? It will be as prescribed by SEBI, it seems. It's not in our syllabus, so don't break your mind. Don't break your head. Sir, now when I raise money from the people, that means I have to issue something like a prospectus. Yes. What and all information I have to mention in that? Don't care. Why? SEBI is going to prescribe it seems. It's not there in our syllabus, so why bother? Leave it. So this is about a zero coupon, zero principal bond. Simple. Done. Next one, okay. Now sir, see here. Guidelines for returning of draft of a document and its resubmission. Now what is that, people? Now whenever a company wants to go for an IPO, there was earlier a chapter called as chapter 6 of ICDR, basically SEBI ICDR, the regulations, which clearly said that how should you file your offer documents and what all information you have to give. Everything is given in this chapter 6. But there what used to happen, too many, to and fro. I will give, you will give, you will give, I will give. We don't know the grounds. So everything was a little confused. So what did SEBI say? Okay, I'll do one thing. Whenever a company is coming for an IPO, I'll give you a clear guideline. What is the guideline? If at all these things are not there, then I'm going to send you back the document. So I'm going to return the document. And what is your job? Your job is to resubmit it. When you resubmit it, I want you to do certain things. And what is that? For that, we have given something called as guidelines. And that is this guidelines. Now see here. So there was a chapter 6. However, SEBI has observed that at times draft offer document, draft letter of offer filed for public issue or rights issue are found lacking in compliance with respect to the instructions given. So whatever I've told you guys to do, you guys have not done. So now what they have done? SEBI has issued guidelines for returning of draft offer and its resubmission. Returning means I'll give it back to you if at all these are not proper. Now what is that here? When will we return the draft offer document? If a company has filed it, and when will the SEBI give it back to you? If at all a draft offer document, it must be drafted in a simple language. Just because you guys are Oxford returner, do not use all those words here. Simple, understandable. There has to be visual representation wherever possible. Meaning people, you might be given certain data. It can be analysis. It can be, say for example, sales. You can give a chart, right? The sales was here. The sales went here. Like this, the candle chart can be given. Yeah. So visual representation. Give it wherever possible. The draft document is presented in a clear, concise and intelligible manner. So basically, it has to be clear. Concise means what people, it has to cover everything. Yeah? And you should be able to interpret something out of it. It should avoid complex representations, vague, ambiguous and imprecise explanation. What is all this vague, ambiguous and all? Confusion. You should not have such things in your prospectus. The risk factors are appropriately worded in simple and unambiguous language. What do you mean by that? What are the risks that is attached with your company? There will be some or the other risk. You have to disclose those risks in your prospectus. Mandatory. If these things are not there, SEBI is going to return your draft offer document. Simple. For that, they have made a guidelines. Now, what is your duty? If they have sent you the document back returned, then you need to resubmit it. So, the resubmission shall be no requirement. You need not pay a fees again. Whatever first you have paid, that is more than sufficient. You need not pay it again. But however, remember, if you do not resubmit it, whatever fees you guys have paid, there will be no refund on it. That money is gone. And not only that, sir, within 2 days of resubmission, you need to tell to the world, sir, that I have resubmitted this form. I'm just telling it to you for your information. Where will I tell it, sir? You need to give it as a public announcement. You need to give it as a public announcement. As prescribed in the manner, as applicable, the issuer shall also include a disclosure that it is resubmitted document. Meaning, sir, in all the places I need to tell that it is a resubmitted document. It's not the originally filed. I have made changes. You have to intimate it to the public. Issuer shall make written intimation to its sectoral regulator, if any, saying about the return and resubmission of the draft offer document as applicable. Meaning what? Let us imagine I'm an insurance company. So I need to tell IRDA andre neenalvo, don't stop. I'm telling Insurance Regulatory Development Authority, sir, you know, I had filed a prospectus and I wanted to go for an IPO. SEBI told me that I've not given all the information it seems. I'm resubmitting the application. I've submitted, sir. Just for your information, I'm telling you, sir, this happened. You need to intimate to your sectoral regulator. If you're a telecom, you'll intimate to TRAI, as the case may be. Clear? That's the amendment. Okay, next one. With regards to promoters' contribution, we already had it in ICDR. What is that, sir? The minimum promoter contribution post the IPO has to be 20%. Meaning, if 100 crore is the post-issue capital of the company, at least 20 crore should be held by the promoters. At times, what happens, people, that the promoters might lack liquidity. I might not have so much of money to hold on to this 20 crore from a promoter's point of view. It may so happen. Now, in such case, what they are telling you, if at all the promoter is not able to, invest in that, or he is not able to hold the 20%, on his behalf, some other people can also come and invest. Earlier, we already had a few people. Now, for this, they have added a few more people. Now, what is that? See here. In case the promoter shareholding is less than 20%, then alternate investment funds, foreign venture capital investor, or scheduled commercial banks, or public financial institutions, PFI, or insurance companies registered with the IRDA. So, these were already there. So, imagine if Reliance, it's a promoter is, say, for example, Mukesh Ambani. Now, when a Reliance goes for listing, Mukesh Ambani, the complete promoter group is supposed to hold 20%, not individually, everyone together. Now, when he is holding 20%, when his shareholding is not able to meet 20, imagine it's 15 or it's 13. In such case, they are telling you on behalf of him, these people can hold. Now, for this list, they have added a few more people. Who is that? Any non-individual public shareholder, non-individual, so it is institutional, public shareholder holding at least 5% of the post-issue capital, meaning, let us imagine I'm a mutual fund. I already have some 7% of shares in your company. Now, I can also hold some shares in your company. It will be counted towards minimum promoter shareholding. So, the first criteria is I should not be an individual. Second one, I should already be holding 5% in your company. If that is the case, I am eligible to be considered as a promoter. I mean, not promoter, sorry. I can compensate the shortfall of the promoter. Just because I hold that now, say imagine some 6% I come and hold. I will not be called as a promoter, but I am eligible, whatever I am holding will be considered as promoter contribution. Understood? Or, so if not non-institutional, I mean non-individual investor, who else? Any entity, individual or non-individual, it can be anyone, forming part of the promoter group other than the promoters, meaning, sir, imagine any other person who is related to the promoter group, not the promoters, but related to the promoters. So, for example, now for Reliance, Mukesh Ambani, the entire Reliance companies are related to the promoter group. So, if not me, they can come and invest. Yes, sir. May contribute to meet the shortfall in minimum contribution. Provided, remember, whatever was there prior, now also it is the same. It cannot exceed 10%. What do you mean by that, people? A promoter has to hold at least 10%. All the others put together can maximum hold 10%. It cannot go beyond this 10%. So now you are saying minimum promoter contribution. How long should I hold, sir? The 20% I cannot sell or you cannot sell. Up to how long, sir? If it's a normal company, 18 months. If it's a SME, then it will be up to 3 years. We'll see, it will come down. So up to 18 months, your minimum promoter contribution should be maintained. That is what you guys will be studied at, you would have studied as lock-in requirement. You cannot sell it. So that is for promoters, no, not for these people, right? Now people, the moment you are holding this 10% on behalf of promoters, remember people, this 10% shall also be subject to this 18 months lock-in period. If they had held also, it would have been them. Now on behalf of them, in their place, you are holding it. Now you should also hold it for 18 months. You cannot sell. For that you should agree. Then okay, you compensate in his place. If not, you do not. Simple, understood? See, lock-in requirements, same thing. Earlier for them, all these people, they were already there. Now they have added them also for a period of 18 months. From the date of allotment in the IPO. Yes, sir. Same thing, promoter contribution in case of SME. Same, cut, copy, paste, non-individual, 5% of everything will again come. But here, the locked in for a period of 3 years. Remember that. Yes, sir. Next amendment, sir, is period of subscription. What are the people? Whenever a company goes for IPO, the minimum offer period shall be 3 working days. 3 working days. Saturday and Sunday is not counted. So an IPO should be open for a minimum 3 working days. Sir, what about maximum? Maximum can be 10 working days. So IPO should be open at least for 3 working days, maximum for 10 working days. So imagine in the newspaper we have told that we will be open for 4 days, 4 working days. We have given an advertisement. But something happens, people, and imagine a COVID hits, or one day they go on a nation band will be there, or a strikeout will be there, or something of that sort will be there. Or imagine a tsunami hits, or a natural calamity happens. Now, which makes the IPO little impossible, act of God. In such cases, people that are telling you can extend your IPO day minimum by 1 day. Minimum period of 1 working day. So earlier I have told that 4 working days is my offer period. You can extend it by minimum 1 working day. You can increase it beyond this also possible. You can increase it by 2, you can increase it by 3. That is possible. But remember, subject to a maximum of 10 working days. You cannot go beyond that. Clear? Huh? This cut copy paste provision is given in SME also. Simple? Done. And some regulations have been omitted, meaning deleted. That is nothing but whenever a company goes for an IPO, they had to do some security deposit, almost 1% of the issue size. They had to do it as a security deposit. Now those regulations have been deleted. So you need not do any security deposit. That's the meaning. Done now? Done. Next one is December 21, 2023. That means applicable for June 2024, covered. Next one. This we have seen it in the previous thing also. This clarify market rumors in June 2024 amendment. You guys refer that first. So we had set the effective date for that amendment as Feb 1st 2024 and August 1st 2024. We had seen that. Now they have postponed the amendment effective date to June 1st 2024 and December 1st 2024. So for you to know what is that, please watch June 24 attempt. Especially I would have highlighted something called as market rumors. So there you would have seen of effective dates that they have pushed it. That's all. Next ones are okay. The next one is called as people SEBI. Okay. Now people, there will be various things. For example, independent women director, the top 1000 listed companies. So in many cases, you would have been seeing the top 100 listed, top 500, top 1000 listed, top 2000 listed. How do we decide what are the top 1000 or 2000 listed entities? Do we take the top entities every day? No, people. The top entities are always decided based upon market capitalization. What is market capitalization? The total shares in the company multiplied by market price of the company's shares. Like this, you would have done for every company. Whichever company gets the highest number, they will be considered as top 1, top 2. Like that, whatever is the rule applicable. Now, whenever I say SEBI LODR, this rule is applicable to top 100, top 500. So you put all the companies in this order. Whoever it will come in top 500, top 1000, for them this rule is applicable. Simple. Now, sir, what they are telling is, how do I decide the top 10, top 20? For that, they are telling you people, every recognized stock exchange, meaning NSE, BSE, shall at the end of the calendar year, what is the calendar year? 31st December, end of calendar year. They have to prepare a list of entities that have listed their specified securities, ranking such entities on the basis of their average market capitalization. Meaning what, sir? By December 31st, let us imagine now you take the example of your 24 only. By December 31st, 2024, every stock exchange, NSE and BSE, example, they have to prepare by the rank, which is my first company, which is my second company, which is my third company. You have to prepare it every 31st December 2024. You have to prepare it every year, 31st December. And within 3 months, people, from the date this list is prepared, that is 31st December, within 3 months or within 3 months from December 31st or from the beginning of the immediate next financial year, whichever is later. So I have to prepare by 31st December. 3 months from then, Jan, Feb, March, leave it. April 1st or the beginning of the immediate next financial year, that is also April 1st only. So technically 1st April 2025 or beginning of the immediate next financial year, that is also 1st April 2025, whichever is later. Sir, are they mad, sir? All both are same only, no? No, people. This beginning of the immediate next financial year, remember, if you guys know the company law, a company is free to follow any other year also as their financial year. You can even follow 1st Jan 24 to 31st December. This is also possible. So your beginning of the year will be 1st Jan 25 now, your financial year. So it will be 1st Jan 2025 or 3 months from 31st December, whichever is later. So for you it will be 31st, basically 1st April 25. That's how you need to see. If a company is following a different financial year, only then that will make sense. If not, it's a usual thing, nothing else. Clear? Yes, and that's how the rule will be applicable. Is clear? So now once it is applicable, top 100. What if next year I go below that? So remember, people, once applicable, it is applicable for 3 years. So once it is applicable for 3 financial years. And after that, again you need not see. So some year, 31st December, it is applicable. So you will start from 1st April, no? Imagine 1st April 25 you would have started, no? So year 1, 26 year 2, 27 year 3. So by that 31st December we will see. If by end of the year you are not coming under that list, people, then by 26, 27, 31st March 27, your regulatory thing will stop. Because from 1st April 27, what is that? Sorry, 1st April 26, 1st April 27. So 31st March 28 will be your end of the year. Correct? So sir, by 1st April 28, the another company will start because you would have replaced. Correct? No? Yes, no? That's it. That's what they've given here, third consecutive year. Okay, next one, sir. There is something called as Risk Management Committee, you guys would have seen. Risk Management Committee shall conduct its board meeting, people. They would have given you that you need to conduct 2 board meetings. They're telling you that earlier, when you're conducting 2 board meetings, there should not be a gap more than 180 days between 2 consecutive meetings. They've increased that to 210 days. So when first meeting happens, the next meeting should happen within not 180, 210 days. That's the maximum gap allowed, not more than that. They've increased this 180 to 210. Clear? Next one, where the listed entity is required to obtain approval of regulatory, government or statutory authorities to fill up such vacancies. This is nothing but 26A1, 26A2. This vacancy is nothing but KMP. There can be some companies, people, let us imagine government companies or statutory companies. If at all, whenever in a government company or statutory company, imagine if a KMP leaves. Now, when should I appoint the next KMP? For that, is there any rule? They're telling you, you do whatever your rule says. But the maximum time I give is not later than 6 months from the date of vacancy. Whether government can appoint whenever it wants, statutory body can appoint whenever it wants, provided the maximum I'll wait is 6 months. Within 6 months, the next KMP should be appointed. Clear? That's the amendment. So next one, prior intimations. Now what is that, sir? Whenever people in a company, you're going to discuss some board meetings, you're going to conduct a board meeting. In this board meeting, if you're discussing some sensitive matters, you need to intimate about such meeting well in advance to the stock exchanges. How many days in advance, sir? You need to intimate at least 2 working days in advance. 2 working days in advance. And remember, this is clear days. What do you mean by cleared is the date of you intimating, the date of the meeting are not counted. So if at all I'm giving the notice on Monday, Tuesday, Wednesday, Thursday can be my date of the meeting. So that's how it is. You should not count the date of the meeting. You should not count the date of the giving the notice. Sir, when sir? Already the list was there, but now they're telling you fundraise by way of issue securities. Imagine if a company discusses in a board meeting that we want to go for an FPO, further public offer. It's basically issue of securities only, no? You're raising money only, no? Now, sir, whenever we are raising securities, whenever we are raising money, should we intimate? Yes, you need to intimate, provided it is not applicable in these cases when excluding security receipts, securitized debt instruments, or money market instruments regulated by RBI. What is that, sir? Securitized instruments means people nothing but you guys would have studied something called as ARC, asset reconstruction companies. Basically, the companies which convert, which buy non-performing assets from a bank, they convert them into, cash and they will give it to the bank. So the companies who are doing this job is called as asset reconstruction company. Now, where will they get money from? They will issue securities to few people and they will raise money. That money they will give it to the banks. Now, whenever they are raising money through an instrument called as security receipts, they need not intimate it to the stock exchange. Well in advance, not required. And any other company who is, raising money market instruments like government securities, treasury bills, as per RBI guidelines, even you also need not have to follow the prior intimation to the stock exchanges. Rest all you need to intimate. That's one, and they've added two more. Any alteration in the form or nature of any of its securities that are listed on the stock exchange or in the rights or privilege to the holder. What do you mean by that, sir? Imagine you have issued preference share with an interest of 9%. We want to make it say 8%, or we want to make it 10%, or we had issued a tenure of 5 years. Now we want to make it 7 years. Alteration of security, yeah. If at all you want to discuss about this in any board meeting, you need to give a prior intimation. Any alteration of date in which the interest or debentures or bonds or the redemption amount of redemption, what is that, sir? Imagine, sir, the date fixed for repaying any debentures interest is the 1st of March. You want to change that. So the redemption date you want to change. If you want to make any such alterations, the date where you guys are passing the board meeting, you guys have to intimate it to the stock exchange. So prior intimation, where the board meeting, where you guys are going to discuss about that, you guys need to intimate about that to the stock exchange at least 2 working days in advance. Clear? Okay. Again, this is covered in June 24. Watch it. Same thing, market rumors and material price movement. They've added this one thing. The promoter, director, KMP or senior management. Who? The promoter, director or KMP or the senior management. Imagine people, these people are promoter, director, KMP or senior management in Infosys. Infosys wants some information from these people. So what will Infosys do? Infosys will ask these details from these people, promoter, director, KMP and senior management. It is their duty to respond to them people, whatever queries we have asked. It is your duty to respond to it. And the listed entity people shall also, whatever is the response they have received from these people for the queries or whatever you guys have asked, they would have responded. Infosys shall forward that particular response to the stock exchanges. So this is what is the query we had on our KMP, and this is what is their reply or the resolution they have given. We need to forward both to the stock exchange. A simple one, nothing more. Next one, sir, in SEBI SAST, and the same thing will apply for buyback also. Now, towards the end it will come. Same thing, material price movement and material price movement. It will come here also. Now what is that? Now if you remember buyback in SAST, you will be giving a price where you are buying back, or SAST also, open offer. You are telling the public that we are going to buy the securities from you at a particular price, and how to calculate it, there are various things given. But at times what it may happen, people, imagine in between someday, because of some good news or because of some bad news, there could have been an extreme movement of the price and price. It can be a top or it can be bottom. It can be all time high, it can be all time low. Now what they're telling you, if at all that material price movement, and you guys have confirmed why there was a material movement, and you have reported it. Imagine you have given your financial statements, or there was some unexpected thing that came your way. That's why the price has gone up. If you guys report it, then they're telling you, you need not consider such movement when you're calculating the average or the price at which you are going to offer to the public. Imagine, people, generally your share is traded at 1000, but at one day it has hit 1100, 1200. All of a sudden, don't you think the offer price goes up for no reason? So they're telling you, if you can prove it, if you can say that yes, I have disclosed it and reported it also, in such cases you need not calculate that day when you're taking the average price, when you're calculating the price. The same thing applies everywhere. This entire thing is that only. In various places, same thing will come. Same thing will come here also. Buyback may be excluded. You need not take it. Clear? Next ones are say prohibition on insider trading. If you remember in the class also we had done one case. What is that, sir? Two companies, people, there was one thing, that unpublished price sensitive information. I'll tell you the gist of the case also, what we had discussed in the class. One company wanted to acquire one more company, say X wanted to merge with company A. After 3 months, one of the promoters had purchased some shares of company A. One of the regulators questioned this purchase. How can this person purchase the shares? Because soon after that, they announced a merger. Now, they filed a case that whatever this person did, it's a insider trading, because he has done a trade based upon a UPSI, unpublished price sensitive information. I am discussing a case which we had in the class only. So in this, even the court also decided, what did the company say? No, your honor, whatever the trade our promoter or any person did, it's not unpublished price sensitive information. They gave various news articles where they are already reported saying, is there a merger between these two companies? Someone says, yes, the merger is going to happen at this price. They said this news is already there in the public domain. It's not unpublished. So whatever we did is not a insider trading. It's not based upon UPSI. And the court also said, yes, whatever they're saying is true. There are so many articles which are published in their favor. Now the question is, such things, can we consider it as a public information, or should we consider it as a UPSI, unpublished? How do we have to consider? For that they have made an amendment. What is that here? SEBI has amended the definition of generally available information, meaning the information to be called as not a UPSI, it should be generally available to the public. So generally available information means information that is accessible to the public on a non-discriminatory basis. Everyone should be aware of it. These words were already there, and this is added. Shall not include unverified event or information reported in print or electronic media. Meaning, just because some newspaper has speculated and you guys have not cleared the rumors, you have not commented upon it at all, that cannot be considered as a public information. It is still considered as generally not available because it is a speculation. That's why they had to add it. So today that case law won't be valid. But yes, this is a prospective, retrospective Allah. That is done. Gatam. This is going forward. Understood? Pakka na? That's all. My dear Mitro, that's all. So simple. That's it, because there is no much amendments. Please go through the June 2024 amendment as well. And do let me know once your result is out. How did the exam go? Were you guys able to take it? Everything. I'll be the most happiest person to see your particular result. Yes. So thank you so much. If you guys have any doubts, let me know. If you guys have understood also, let me know. I'll also try to make sure that this particular material is available for you to download. Do download it in the description. Yes. Thank you so much. See you all.